knowledge in the room here before we get started. We have friends that are coming to join us on our Zoom screen. So we have hi virtual friends in our virtual screen. We are happy to see all of you as well. Hi, everybody. Good morning. Good morning. My name is Stacey Soleil. I am going to be your moderator today. I flew in from Tulsa to come and hang out with all of you here in Austin. Thanks for having me. Yeah, thank you for the one person. Appreciate that. It only takes one. Oh, there it is. There it is. Okay, so I want to just sort of lay out the flow of today. We want to make this very engaged. We want to make this very meaningful and make this more of a conversation instead of being talked at. Let's have a conversation together. So if you're hiding in the back, you're not going to get to hide. As I walked around, I asked each of you, please think about, as you're hearing the conversation unravel, if you've got a question or maybe you have a thought, feel free to write that down and we're going to bring that back into the conversation. I think that the most meaningful conversations open up when we make it a two-way conversation, right? Okay, so how the format's going to go is we're going to have a quick introduction from our sponsor, Samantha. Come on up and let's you can't have an event without a sponsor. So thank you very much for doing that. So if you want to take the mic and share a little bit.
Gosh, I hate talking in front of this many people, but here I am again. My name is Samantha Conkey. I'm with Capital Title. I've been in the title business for close to 20 years now. Most of that worked with Eric and now his team, which is so awesome to see how much y'all have grown and so proud of him and the business that he's built. I've been with Capital Title for about 10 years. I could talk to you about title insurance. It's super boring and everyone sells the same thing. It's all regulated, right? I can't offer you lower rates. I can't offer you quicker closings. All I can offer you is my service, which you guys don't know me from anyone. So it's kind of hard to just tell you in 5 minutes, but I will say I build my business on a foundation of trust. My daughter asked me the other day, she's 11, and she said, Mom, what does escrow mean? Like nobody knows what an escrow officer even is. And I was like, well, basically it means trust. I mean, you guys are trusting me to do a good job for your customers so that they come back to you for the next deal. I mean, they're sending us hundreds of thousands of dollars, all of their personal information, and you don't want that to go to someone that you don't know. So I understand the need for that and understand the need to build your business from that and to find someone that you can trust on your team to close every transaction successfully so you get in the next deal. Right now, I know we've all seen a shift in the market where there's a lot more first-time home buyers. So that means people that don't necessarily know what they're doing. They're just real skittish. Lots of issues with lenders now because everyone's going with the cheapest lender and might not be someone that you know or have worked with before. And I've been through all of those scenarios. I understand the need for damage control, good communication, and at the end of the day, want your customers to leave with a good experience after their closing and hopefully forget about everything that happened before that sometimes. So I encourage you to give us a try. You can ask Eric, ask lots of people in this room that I've closed with before if you need a referral or some kind of reference, but I would love for you to trust me with your business. All right.
I actually have a very soft spot in my heart for anyone that works in title. So I work with a tech company. So I'm head of community with Follow Up Boss. Are any of you familiar with the company Follow Up Boss? Oh, yay. That's exciting. So I work in the tech space with a CRM built for real estate. But prior to coming to Follow Up Boss, I worked in the title space, and that is probably one of the hardest spaces to work in. You get more doors slammed on your face than anywhere else. So I have a soft spot in my heart for the ones that really work hard. So you're awesome. Okay, so let's bring out the stars of the show, shall we? Let's bring out Max and Eric to kick this thing off.
Thank you.
Yeah. So, Eric, do we want to start off on sunshine and rainbows, or do we want to start off with reality? Like, where do you want to start off with this?
So I'll start off setting expectations. Max and I met last week and we started putting together a PowerPoint, and it was getting long, and I tend to be verbose. Yeah. Anyways, Max said, nobody wants to see that. that's really boring. And okay, great. I'd spent an hour on it, so it wasn't the end of the world.
That's why we needed a moderator.
Delete it. Exactly. So we do have visuals. If anybody would like to see them, I can also email them to you after the fact. But we're going to talk a whole lot, and we're going to answer some questions and talk about the market, talk about what we think is going on right now, where we think it's going. So sunshine and rainbows, or the opposite?
I don't know. I think it's important to start off with, the foundations, the facts,
Yeah.
right? And I think I was telling, last night we met for dinner, and one of the things that I shared with the gentleman is, I'm at industry events all over the country, and very rarely do you see before an event people giving you lots of information, sharing facts with you. I mean, how many of you were getting all these emails he's sending out with all of this data? I'm like, do you have anything left to talk about? That's awesome. And I just thought that level of transparency and just allowing us to kind of ruminate on what it is that we're going to have a conversation about. I appreciate that. Thank you.
Yeah,
Yeah.
you're welcome. I like to talk, so it's easy.
Yeah. So let's kind of start there. You shared some interesting background. The
Yeah.
last couple of days.
So this morning I emailed everyone with some numbers that we posted on social as well. And who here is having a better year than you had last year right now? And don't be shy. Raise your hand if you are.
Congratulations.
Congratulations. That's amazing. Who here is having a worse year than they were last year? Yeah. I'll be super transparent. We will be lucky if we are profitable this year at the brokerage.
Same.
It's what happens whenever the market goes down, right? And the numbers that I shared this morning are that roughly half of your peers have not sold a house this year. You guys aware of that? Yeah. And from memory, I think it's something like, I want to say less than 35%, maybe less than 25, have not sold more than 2 houses this year. And then it's less than 5% have sold 1 house a month so far. And less than 2% have sold, more than 1 house a month, and less than 2% have sold 2 houses or more a month. So from my experience, I started off as an independent agent, then team lead. Now I run a brokerage, and we've helped a lot of people, increase their production. And I know that agents really feel anxious whenever they're not selling 1 house a month. And the reason why is because you're saying, like, where's the next deal coming from? I don't have a deal out there. 95% of the agents in Austin right now have that sense of anxiety, and it's totally normal, right? If you don't know where your next deal is going to come from, is a reason to kind of be anxious. I also know that agents get really, really secure. They feel really good about their jobs whenever you're selling around 2 houses a month. And then I can go way off into the deep end about how when you get past 3, it gets really hard and whatnot. But when you're around 2 a month, that's whenever you feel really secure. You're like, hey, I've got 2 under contract. There's no way both of those are going to bust out. And you're probably working with 3 or 4 other people that are going to go under contract soon. So 98% of your peers are not doing that. And so you don't have that level of security. You don't have that job security. So if you feel uneasy, it's normal and it's okay. Max and I, we lift each other up a lot because we both are building our businesses, and it's very anxiety inducing to have a lot of additional expenses whenever you watch revenue go the opposite direction. But whenever you have those feelings and you talk to other people about it, you can often alleviate it. And then you start, that goes down, and you say, what can I do to improve my situation? That's why we're here. What can we do? Where are we? What can we do?
Well, yeah, and rising tides lift, right? And so if you think about, most of you probably who are in this room because you have some level of concern, or you have some level of interest for somebody on your team that you're looking out for. And so being able to tap into that and recognize that, together you can collaborate. And even if you work in a cooperative, or I don't like to say competition, but like co-opetition. Yeah. Sharing.
Abundance mindset, right?
Yeah.
I mean, there's plenty of
there's
business.
something there, something that we can do to help each other to survive and win through challenging times.
So, I mean, where are we right now? And I think Max is sick of me calling him and asking this question, but how's the mortgage market, Max? Where is it going?
Who knows?
Thank you for
coming.
So obviously rates are on the rise. Most of y'all know I tend to follow mortgage news daily for rates. Whenever people ask me what rates are doing, I generally send that link. I've sent it to Eric like 17 times. But it tracks daily average rates, right? In October of 22, we hit our high of 737, which was about the high from 2008, 2007, something like that. Things started getting better. We're kind of trucking in the right direction. I even put out a reel on March 1st, I think it
I
was.
love that social has this history of what we've always thought.
Yeah, well, rates got to 599 that day. And I was like, we're all trapped. We're frozen in our homes. But here's some good news. And that was the bottom. Last week, we saw it go back on Thursday and Friday to 737. Monday, we were 748. Today, it's 749, or yesterday it was 749. Today's a good day. Today, the bond market's doing well. We'll see what the average rate looks like. My guess, 7.4, 7.38, something like that. I don't think, higher for longer is where we are. So the idea that we're going to be saved by rates dropping down into the low sixes and the fives, in the next 2, 3, 4 months, we need to get over that.
Can we, I mean, if it's okay with all of you, because of the rates climbing, and I think Samantha had mentioned that everybody's shopping to find the best possible rate. Understandable, right? You want to advocate on behalf of your client. What does that really look like, though? I mean, what does it really look like to go shop for the lowest rate versus navigate the rate that it's at with somebody that you really trust? I mean, I'm really curious to see, like, financially, what does that equate to?
No, I appreciate you asking that. So I've been talking to a lot of people a lot. If you've talked to me lately, you've heard me say, let's stop talking about rate. We're all putting out there, rates are bad. Like, let's stop that. When a customer wants the best rate, they don't really know what they're asking for. They think it's a competition. My friend got this, my sister got this. What did you pay for the rate? How many points? I talked to a customer yesterday. I can get you 6%. It's probably going to cost 4 or 5 points. The whole idea is, let's talk about payment and comfortability. What is the most you as a buyer are comfortable paying on a monthly basis? And then how can we take that payment and back it into a sales price via what do you have to use for total cash to close? Can we negotiate for the sellers to pay for closing costs? But when rates are 2.5% and 3%, it doesn't matter, right? Everyone's, it's 3% and that's it. All of y'all have seen closing statements lately. Everybody's paying a point for the most part. I'd say probably 97% of the deals out there have points involved, right, to get the rate down. And so the question of what is your rate, or how do I get the lowest rate, really is coming from a place where people just don't know what to ask, but what they want is a fair deal. And how can I get into something that's comfortable?
Well, also, I mean, as a recent home buyer myself, it's interesting. How many of you, I would assume most of you here, have gone through the process as an individual, but remembering what it was like to be on the other side of it, to remember what it was like going, okay, I have to tap into my savings. I have to tap into the future of what our monthly budget looks like. So remembering, if we can put on our hat of what that feels like, and recognize, okay, how do we figure out, like, how do I work with somebody who's going to help me figure out what's most important to my client?
I think that it all comes down to, from the lender perspective, lenders need to be asking questions, right? What are goals? What are concerns? What are your fears? What are your long-term goals? What are your short-term goals? And really trying to devise a plan, not just for today, but I think everybody understands that in the next, 12, 24, 36 months, at some point, rates are going to come down and people are going to refinance. So if we're structuring deals today, not just to get a commission, but how do we structure it now so that it will also benefit you later when the refi comes?
Max and I are pretty good friends because he knows how to explain things to me, and that's like a kindergartner, basically. So the way he explained it to me is that, yeah, you can get 6%. You're going to pay 3 or 4 points for it. How many years does that take to pay itself back?
Well, so in a normal world, you generally pay 1 point and it lowers your rate 1/4 of a point. And that's kind of how it's been for all time. And so you don't always see a lot of points being paid. But since really May, June of last year, the spreads have gotten much wider because bank liquidity is a problem and there's no value in servicing. And I'm going to kind of go off here for a second, but when a bank buys a loan, you close a loan, bank buys it, it's going to take that bank 4 or 5 years to break even on what they paid for the loan before they start making money, right? But if these loans are going to pay off in 2 or 3 years, that bank's not going to make any money. So now all of a sudden they're wanting the borrowers to pay a little bit more upfront to help cover some of this, which is why you're seeing more points being paid now really than ever before in the history of my career. So now all of a sudden, 1 point's not just going to lower you 1/4 of a point. It might lower you 1/2 of a point or 3/4 of a point. So when it takes 1 point for 1/4 point, that's about a 6-year break even. It's not a very good deal, right? Unless you're going to be in the house that long and rates are 3.5%, then fine. But now, if you can pay 1 point and lower your break-even point to 3 years or 2.5 years, well, that's a good hedge against what if rates don't drop in the next 12, 18, 24 months, right? It is tax deductible, so you get a benefit there, but also you're hedging your bets. And so you see a lot of that. So then it comes down to, do I pay 1 point? Do I pay 2 points? Do I pay 3 points? And you really just have to sit there and do the math and figure out what's the appropriate move.
Yeah, I mean, I think it's questions like, when do you expect to refi? How long will you be in the house? And then somebody with experience, somebody with true knowledge can help somebody put together a plan. That's the way I read it.
Yeah.
Not Rocket Mortgage. They're not going to probably do that.
So out of curiosity then, could any real estate agent then say, okay, this is the interest rate that my client wants to be at, and buy their way
Sure.
to that interest rate?
I mean, you could say you want to be at anything. I think.
Well, I mean, I'm not talking from like an
No,
unrealistic standpoint,
I know.
but if somebody was coming up against, let's not go into the right out of COVID market, but if they wanted to get into a more realistic standpoint, do you think that that is a way to negotiate?
Well, sure. But what I think the way to negotiate is you have a plan with a lender and say, okay, for me to get to this payment, this is what I need to do, and this is what it's going to cost. And then you and the real estate agent work with the selling side to negotiate, what are we going to get in seller paid closing cost, right? And then how are we going to use them? Are we going to do a 2-1 buy down? Are we going to do a permanent buy down? Are we going to do, a lot of y'all hear me talk about single pay mortgage insurance premiums, which is a way to avoid monthly mortgage insurance. And those are a lot of times refundable. So are we going to do that? But it's really, again, it all comes back to not just what is the rate, but what is the whole package? What is the whole plan? How are we going to put this together to help the buyer get what they want?
So what I'm hearing as somebody who just went through this process is it's important to work with somebody who understands all of those different moving parts, and you don't necessarily know all the questions to ask as the buyer. You don't. So they're counting on you to know what to ask. And if you don't know, somebody who will know. So I think I will say I was fortunate to have a lending partner that was very informative and broke it down and made it easy for me to understand, which I appreciated.
Yeah.
Because I think sometimes the buyer is worried that somebody's trying to pull one over on them. How many of you experience that? They're just like, I don't trust any of them because they're all trying to pull one over on me. So how do you get past that?
It's a lot of time, right? Like all of a sudden, and we'll talk about this more later, and me and Eric talk about it all the time, but you're working 4, 5, 6 times as hard for 25, 50% the pay that you used to get. It's true for agents. It's true for lenders. It's true for everybody, right? Margin compression on the lending side is very real. Who's going to make the least amount of money? Who's going to lose the most money? Like this is a real thing that's going on. We all just need to work together and work harder. So now I've got to talk to a customer for maybe 2 hours or 3 hours going through all these different options versus a 5-minute conversation of, look, fill out the app, send me your stuff. I'll send you an estimate. That's what's going to happen. But now we got to break it down. So let's go through these 6 or 8 estimates, right? Now we're going to look at 5, 10, 15, 20% down. We're going to look at monthly MI. We're going to look at single pay premium MI. We're going to figure out if I refinance in 2 years and I have a single pay premium, what is my refund on that versus how much did I spend on monthly MI? Are we going to do a 2-1 buy down? Are we all of those things? But it's
My
really,
head hurts. That's a lot. It's a lot.
It's spending time to educate and show people what their real options are. And that's what it comes down to on the lending side. And I know it's going to be similar for the real estate side as well.
It's in the air, right? I mean, the same way that everyone here has less, income security, right? Your clients have less job security. So in the past, a year and a half ago, Indeed had, 50% more job postings on it. Legitimately, that's like a number that we've looked at. Those aren't there anymore. So if your clients have a job and they've not been laid off, they probably won't be, just looking at the tea leaves right now, but they don't feel real good about it, because if it were to happen, they're not hiring right now, right? So because that job security is not there, because people are not, sure about the market, they're going to do extra diligence whenever they make a purchase. That's why they're going to ask for a 2-hour, 3-hour consult from Max. That's why, by the numbers, they're going to take 55 days to buy a property rather than a year ago, 14 days, things like that. So we all just have to work harder. That's just the name of the game. There's so much pie out there, right? It's going to take more work to get your slice of the pie, which, by the way, is smaller than it was last year. So that also is not great, but it is going to get bigger. And whoever's worked really hard is going to maintain their fraction of the pie, and that piece is just going to get bigger. That's a topic for a little bit later. What I would say is approach everyone with a consultative approach. Don't ever try to use any of these strategies as, no, you should buy. If somebody's skeptical that now's not the right time to buy, you can tell them like, hey, well, not sure that I agree with that 100%. Here's the reason why. But if you sell it to them, if you try to sell it to them, you're going to fail. And then whenever they ultimately do buy 12 months from now, 24 months from now, they're not going to use you. They're going to use somebody else. So you look at it as a pipeline building opportunity, use it as a relationship building opportunity right now. You sell what you can right now by being as consultative as you can. And then when they do come around, you're gonna have a killer year.
We were talking a little bit about this last night, that even if somebody comes out of the gate feeling very skeptical and, like, no, I've already decided, I'm waiting. Most of the time, those that are firmly grounded on I'm waiting end up not waiting. Most of them don't, but that doesn't mean that they're going to work with the person that they first talked to if you pushed the button too hard, right? Yeah. How many of you have experienced that, where the first conversation, you get that pushback and you're trying to be like, no, it's not as bad. I mean, look it used to be way worse. And then you try to sell them on back, remember when it was much, much higher? You've lost them, right?
I mean, raise your hand if you love pushy salesmen.
Oh, for sure.
Right? Love them. Absolutely.
That's because you probably want to, get the drivers in the room, right? How many of you are interested in understanding what has worked? What has worked? Like Eric, like what has worked?
It's boring.
But if I don't know about you, but if something works, I want to know.
Do you want me to go off on my old man rant about this? It's not a rant, it's just a talk.
Old man? I mean, you're probably one of the youngest people in the room. Like, seriously? Yes, tell me your own
bones. Yeah, so I'm a massive fan of all these like efficiency things. And one of them is a Pareto principle. It's an 80-20 rule that applies to kind of everything. Whenever you are producing, around what you want, you have security, you're not worried about where's the mortgage payment coming from, whatnot. You should always spend 80% of your time on what confidently works. And you should experiment with 20% of your time. The reason you do that is so that you can grow. And we do that with marketing dollars now because we don't have as much time. So we spend 80% of our marketing dollars on what we know is certainly going to work. And we spend 20% of our money on marketing dollars that we are not sure. 99% of those marketing dollars that we're not sure of, we could have lit it on fire, literally. No joke, right? But the good news is that whenever we do find something in that 1%, we get to now dial that up to 11, and then we grow our market share. So that's why you grow. That's how you grow your own business, is through experimentation. Does it make sense to experiment with anything whenever you are not sure where your mortgage payment is going to come from? The answer is absolutely not. Unless nothing is working for you that's a totally separate conversation. But I think if you're here, some things are working for you. So what we did as an exercise with the company is we asked, any of the agents, we said, would you like to look at a production analysis? Would you like to, look at every deal you've had for the past 2 years, and we're going to code it. And what we meant by that was, here's a spreadsheet. I want you to write down where this deal came from. We ended up looking at 304 deals over 6 agents. 50% was SOI. We spend a lot of money on marketing at our company. We spend about $1 million a year, and 50% was SOI, right? 36% was company generated stuff. So all that money we spent, 36%, 14%, everything else. The runner up was open houses at 2%, right? Social was like 1.5%, something like that. Now, if you're an outlier and you look at your business and you get a significant portion from open houses, social, whatever it might be, that's proven. Dial it right up. But it's important to look at what's worked for yourself over the past 2 years, code it. And if you have not dialed it up to 11, you have to dial that up to 11. Here's what's interesting. The agents who did raise their hand and say, I would like for you to do this production analysis, they're all high producers, right? And not a single agent didn't have double negative. There was an opportunity to improve SOI systems with every agent we talked to, right? There was something, at least one thing that they could do to do that. So that's why you hear SOI, 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 right? Because for the most part, that's what works. Doesn't work for everybody, because if you're brand new, I got into the business when I was 23 years old, 24 years old, and I was a bartender, and I'd lived in Austin for exactly 1 year, right? What was my SOI? Is a bunch of people back in Oklahoma that could buy houses, maybe. I didn't have the strongest friend group, and probably the weakest friend group you could possibly have in Austin, Texas. So like, luckily I figured out internet marketing, within a short period of time, but it was, had to do it. By the way, my monthly expenses were like $2,000 a month. So it was a little bit easier whenever you're that age. So if you're that small edge case where you literally have no SOI, yeah, you have to figure out where a proven marketing source is. But most people in this room have an SOI. And I would venture to say that the people with an SOI here, 100% of them are not dialed the way that they should be dialed on it.
Well, let's put a pause there.
We have like 15 different marketing channels, and that's what, can't tell what those are.
One of the things I really, one of the things I think will be really good is, as we're going through this, let's make this interactive. And so how many, let's kind of open up the channels here a little bit. How many of you are finding that your primary source is your SOI? Okay. Those of you, that's about half the room. So the other half, are all of you getting your opportunities through lead gen? Where are they coming from? Open houses? Referrals? Okay. Yeah. Yeah. And the reason I'm asking the questions, and I recognize that we have half the room where that's gone unanswered. That says something, right? We're not 100% sure. We're not 100% sure. And so we have to stop here. We have to, because in order to bring this around, what do you those of you that raised your hand for SOI, just shout out the answers. What do you consider to be SOI? Past client? What else? Referrals? Everyone you know. Okay. Everyone you know that what? Okay. Now,
that's an extension of your SOI if you do it that way. I was on my bike this morning thinking about stuff. That's what I do.
Okay.
And, sorry.
Yeah. So I want to say this then. So now that we've kind of shot out those answers, let's ask that question one more time. Okay. How many of you are using your SOI? That's your see, now there's more hands. So sometimes I think people don't realize, we had this conversation inside the community the other day, and someone's like, I don't want to talk to the people that when I go to get my hair done, or the people that work with my husband, like that's not my SOI. Like, so how do I figure out who my SOI really? I'm like, wait, how is that not your SOI? That is your SOI. If you're getting your hair cut, you're having a conversation with them. That is within your sphere of influence. Not everybody's definition of that sphere is the same. So I think just the fundamentals of tapping into where those conversations can be happening you have to dive in a little bit deeper on that. Not everybody surprisingly don't realize it.
So some agents that I've met have done that production exercise. Raise your hand if you've done that. If you have a spreadsheet that you know exactly what deal you have and you, look at it and code it, right? That was it, just from my hip. That's probably 5 to 10% of the room. So that means that 95% of the room has not done that. Who has extra time right now? I know the market's on fire and we're all too busy selling houses. So it doesn't take a long time. There's a report in Matrix where you can go run your own production report. There will be some off-market stuff that's not represented there. Run that report, figure out what's not on it, put it in a spreadsheet, and then just through your own brain, just start free flowing, writing down what it is, and then figure out the commonalities.
There's something about when you see it in writing, whatever that it is, like that, you know, whether you're visualizing your success or whether you're just really analyzing the data, there's something about seeing something in writing that helps your brain to connect the dots of like, oh, that's where the missing piece is for me. So I think it's really, really cool. So when you say code it, how are you coding it?
I mean, so when you start, you literally like freeform it. So whenever somebody says past client, referral, family, things like that, I then look at that. And this is what we did with the agents was that's all SOI. So you'll look at it and you'll say, oh, well, that was from Instagram, but that was actually my friend that messaged me on Instagram. That's really SOI, right? And so you just have to think about it critically a little bit after that. And you try not to slice it up too much. Slicing it up too much will lead you in all kinds of different directions. But if you look at it and say like, let's say, you know, Zillow Flex is a program a lot of people use successfully. So you'll know exactly which deals are Zillow leads, right? Or if you buy leads from YLOPO or somebody like that, you'll know exactly that that's where those deals came from. But SOI, whenever you really look at it, you'll find it's relatively easy. If it smells like SOI, it probably is SOI.
It smells like that. I feel like that should be a t-shirt.
It smells good, by the way. It's delicious.
So fun. So this is so random.
I was like Taco Deli.
So how many of do we have any, first of all, is there anyone from any of the things that we've said so far, anyone have a question or an interjection? Wait, hang on a second. Let me do this. Let me run my mic over because hi, everybody on Zoom. I just want to say hello to you and that we're glad you're here. Let's make sure so that they can hear it as well. Just a second.
I think it's a big deal too.
Yeah, for sure.
About the tax deduction for the point buy down, can you expand on that? And if we're having a seller concession for the buy down, if there's any tax deduction, who it comes from? No, you're not a CPA, but want to have a good understanding so that when we're presenting it either to buyers as an option or sellers, they're seeing the full scale picture of the financial side of it.
So yes, I am not a CPA. When you buy down an interest rate, you're paying an upfront fee to get lower interest over time, right? So when you fill out your forms at the end of the year, I bought a house. What did you pay in points? What did you pay in interest? What did you pay in taxes? That all goes into there. Can a seller deduct that? I don't know. My guess is probably not, because the seller credit comes as a lump sum credit on page 3 of the CD. So
they won't be able to, because it's going to be a net proceeds that they have to. Yeah.
So
I mean, yes and no. Well, the money didn't go into their pocket, so why would they deduct it, right? So if they're giving a $10,000 credit, they never realized it, so you don't even have to account for it on taxes. So, and I can barely do math, by the way. So,
but as a buyer, it is a question when you go to fill out your form. Did you buy a house? Did you pay any points? What did you pay in interest? What did you pay in taxes? And it's all there. It's also important to note there is a difference between discount points and an origination fee. An origination fee, and like sometimes you'll see it, very rarely, but if someone's charging a specific 1% origination fee, that is not tax deductible, whereas a discount point is. So now you'll see on the CD, box A makes up all of the origination fees. So, you know, whether it's processing, underwriting, closing, funding, whatever, right? But that percentage, sometimes banks will charge it as an origination fee rather than a discount point.
I can't go.
And if it's an origination fee, it's not
because I
tax deductible.
teach.
So what I'm hearing is every one of us in the room should have a really good tax accountant that you have a strong relationship with to help navigate that.
Yes.
Yeah.
And if you
Do we
find
have
one,
any
let me
tax
know.
accountants in the room by any chance? Because you would be very popular right now. Any other questions while I'm running around here? Save me some heel space. Okay, we're moving on. All right, Eric, take us in the next direction.
Market, does anybody want to talk about where we are in the market and where it's probably going? I mean, who thinks the market's getting worse? We're probably in the valley right now. That's probably where we are. And if you look at the numbers, and I have slides and whatnot, I'll email you guys some stuff after that, but we are more than likely going to see moderate year-over-year increases coming up. And we know that because the past 2 months, we've seen significant pending unit increases, like 15%. So you're going to start seeing sold volume go up just a little bit on a year-over-year basis. But whenever you look at year-over-year numbers, remember what we're comparing against. And in hindsight, Q3, Q4 of 2022 will probably be the worst of this, is probably the worst of the demand, right? So anybody who's buying right now is pretty rate tolerant at 7.5% right now. It might get to 8, might go to 7. Who really knows? You know, it's going to be somewhere around there. Yeah.
One of three things.
One of three things. It's going to go up, down, or stay the same. But whoever's buying right now is pretty rate tolerant. Like they have a friggin' second baby. They're in the smallest house they possibly can own, and they're ready to get out. They're busting at the seams, right? What one of the concepts Max has, always told me is that we're looking at the Fed rate. The Fed rate doesn't directly affect a whole lot, but everything sort of orbits around it. So mortgage rates will decline whenever the Fed announces that they're going to stop raising rates.
Well, I believe
Yeah.
part of the problem with rates right now is, well, the problem with everything right now is the Fed. Thanks, JPal. Every time he raises rates, bonds that are owned are worth less. So when we look back at Silicon Valley and what happened there, right?
Talking about Silicon Valley Bank, by the way.
Yes, not the show or the place. What happened with that bank in First Republic, they're started to talk about being a run on the bank and they're not liquid. And I think it was actually Peter Thiel that might have figured it out that started it. There was essentially several regulations out there that says when a bank buys bonds, because that's what a bank does, deposits in a bank are a liability. They have to take that money and go do something with it. So they were buying a bunch of bonds, and they were buying bonds at low coupon rates because that's where they were at the time. Well, then the Fed starts hiking rates, and every time the Fed hikes rates, those bonds become worth less. So now all of a sudden I can go buy a 5% bond. Why do I want a 2.5% bond? So now my 2.5% bond is worth half of what it was when rates are 5. So as long as rates keep getting raised, previous bonds are worth less. I think that once the Fed indicates they are done hiking rates, that we'll start to see some improvement. And when they start lowering rates, again, every time the Fed raises or lowers a rate, it does not mean that mortgage rates change that day. So as rates have been getting raised, it's been great for all the loan officers in the room because everybody thinks, oh, mortgages just got more expensive today. It's not true. And when rates start getting cut and they say the Fed cut the rate 1/4 point or 1/2 point, that does not mean that day or the next day mortgage rates are going to be 1/4 or 0.5% lower. So set those expectations there. But yeah, once they say they're done, then I believe we'll start to see some improvement in rates. And then as they start to cut sometime in 24, I see people say big spring, I see people say summer, but whenever that happens, we'll start to see a more meaningful drop.
So whenever you're predicting the future, you obviously have to hedge and you have to say this is the highest likelihood event, right? So far the Fed has been successful. They wanted to dial the economy way down, and they did that by raising rates, by stopping QE and whatnot. Are they still saying that they're going to raise one more, or are they done?
They're not saying, there's the big meeting Friday at Jackson Hole that everybody's kind of.
Wait, who's they?
The Fed.
The Fed.
Yeah.
Okay. Just want to make sure because we have an audience listening online here too. And we have to make sure we're breaking down the very, very small details. So they is the Fed.
Yes.
And where did they talk? Where do they make decisions?
They're from on high, like just a mountaintop somewhere. Yes. I guess literally this next
every year they have their big event in Jackson Hole, and it's Friday. And so everybody's watching very intently.
Let's actually talk a little bit about that. This is by design, by the way, on purpose, because 100% of the time there's going to be maybe a few people in the room who are like, I actually have no idea what we're talking about. And they're afraid to say that. And I think it's really important that we always speak to the most confusing things and make them as super simple as possible. So what's happening in Jackson Hole?
Well, so the Fed rate, right, just as like the 30-second primer on it is that's the rate at which banks borrow, right? So the banks don't actually have all the money. They borrow the money and then they lend it at a higher rate. That's how they make money. So whenever the Fed increases the rate, the banks have to loan at a higher rate. When they lower the rate, they can loan at a lower rate. So that's how they're able to dial up the economy and dial it down. They thought inflation was out of control, so they're increasing it. Probably a good move. The extent to which they're increasing it, probably not a good move, but whatever. What Max is talking about is predicting what the Fed is going to do. I look to people that have more money on the line than I do, and that would be like Goldman Sachs. And they're predicting right now that the Fed will start lowering the rates next June. Yeah. So I think that's kind of a worst case scenario. I don't see a scenario where they start lowering rates later than that. I do see a scenario where they could potentially start lowering rates earlier than that. But whenever they start lowering rates, you're going to see more liquidity in the economy, which effectively just means the economy is going to get better. Job market's going to heat up. Mortgage rates are going to go down. Everything's going to start getting better. So broad strokes, next year is going to start getting better. It's not going to be awesome.
Okay, so let's stop there. What publications do each of you read that gives you what you would say you look to somebody who has more on the line to lose? So what publications do you trust? Do you read? That you look at every morning when you drink your coffee?
I text Max in the morning.
Okay, that's it. That's a good way to look at it. What about you?
Oh man, I look at Housing Wire. I listen to I like to listen a lot, more than read a lot of different publications, but I definitely look at Housing Wire, Mortgage News Daily. I've got a subscription to MBS Live. I do listen to Barry Habib. I listen to Logan Mohtashami, who is brilliant.
Shout out to Logan.
Yeah,
know
I definitely
Logan.
Follow him on Instagram, follow him on Twitter. Logan Mohtashami.
Yeah, tell him that Stacey Soleil sent
Shami.
you.
I can't spell it. We can send it out, but he's the head, the lead analyst for Housing Wire. I also follow a guy on Facebook that I've known for years and years. His name's Dan Ryach. He's really smart too, and these guys they're much smarter than me. I am not a chart reader. I'm not any of those things, but
I think anyone who can simplify the complicated has got my attention. How about you? Right? Because you have to turn around and you're like a translator. By the way, that's another one of your job titles as a real estate agent is you're a translator, right? You have to translate what the hell he's talking about, what this lender is talking about, what the escrow means, what the title means. And that translation process, sometimes it gets lost, right? Sometimes we accidentally lose something in the communication channel. So having nice additional ways to take in that information, whether it's following someone on social or listening to a podcast, to help make all of that make a lot more sense is so helpful.
I'll say too, it can railroad you if you obsessively watch it. I certainly think there's a lot of benefit in, cutting through the noise, going about your day, doing what matters. I mean, doing what works, like working on your job. I do pay a lot of attention whenever the CPI report's released. The CPI report is what the Fed is looking at. That's how they're going to make their decision. And then whenever there is a Fed meeting, pay attention to that. I spend a lot of time being skeptical about.
Where did you get the CPI report?
Just Google it. I mean, whenever it's going to come out, and then the morning it comes out, it's all over the news. It's going to be factual. It's going to say, this is what the CPI report is. If you see anything shocking, be skeptical, don't take it at face value. Usually read 2 or 3 sources to make sure that everything's accurate. Anytime I see a sensational headline, I'm immediately skeptical. What could be wrong with this? I can go on a long diatribe about for-profit media and clickbait and whatnot. And that's when I do text Max. If I see something that looks crazy, we're on a text thread with a few other people. Like, did you guys see this? What do you think? And generally laser focus on CPI report, what the Fed has to say, and then what the sort of unbiased, smart people with a whole lot of money think. Morgan Stanley, Goldman Sachs, things like that.
Wait, there's unbiased people?
Well, the people that only care about making money, which are the people with a lot of money, generally speaking, whatever they say,
but their bias is money. So I'm just saying. Yeah. But okay. So CPI reports. And what was the other go-to? Housing Wire?
Yeah. I mean, when you start to look at reports, CPI is always the granddaddy of them all, right? But the employment report, the non-farm payrolls, ADP, all of those things. But to Eric's point too, when this was all going on in 2008, 2009, I wasn't paying attention to anything. I worked at a company that I worked at a company and they would send out a market update and they would say things like hawkish and dovish and CPI.
Sorry, who would like to see a flyer from Max in 2009? I'm going to email it to everyone after this. I have it. He has his AOL.
It's
email
got an
address.
AOL on there. Yeah. I actually had a customer tell me he couldn't trust anybody with an AOL email address.
Smart guy.
And that's when I changed it.
Well, I would say though, but that's a great point though.
Well, but the point is I didn't pay attention to any of it. And like, I knew things weren't great for people, but in my little bubble, things were fine. You know, like I knew what I knew. I knew I had deals coming in. I knew I was making money and I didn't care about all the noise. And obviously now, you know, I've got a larger team and I own a company and like, I have to care about these things, but it was a lot easier back then to just like, I guess my point is don't focus all the time on everything. Get a little bit, get your nuggets and move on. Keep your head down and focus on what you're good at and what you need to do. And don't focus on all the stuff you can't control.
I was about to say what you can affect, and you cannot affect the CPI report. You cannot affect what the Fed's going to do. You can certainly affect what you're doing and how that's going to impact your business, and that's going to impact your life. So that's what you need to focus on. Not even 80-20 rule. That's a 99-1 rule. You know, spend 1% figuring out what environment am I operating in? Great, done. I know that that's going to be that same environment for at least a month. Let's go to work.
Yeah. And like I tell my guys all the time, you need to focus on what you can control. You can control your attitude. You can control your productivity. And that's what you focus on. If you focus on all the outside things, depression, anxiety, all these things seep in and cloud your mind. And you need to just stay clear-minded and focus on what you can control, which is productivity and your attitude. That's overlooked a lot, especially now. And, you know, I read something yesterday. Good agents, good lenders, stop talking about how bad the market is. Like they don't think about it. They just focus on what they can control and hear.
To take it to a positive, I mean, it is, I genuinely believe that it's an opportunity for everybody here. It's not an opportunity to make more money this year than you made last year. The folks in the room that are doing that, congratulations. That's awesome. Something you're doing is working really, really well. Make sure you know what it is and dial it up to 11. But for everybody else, you know, you need to work towards getting more of the smaller pie and then holding on to that pie so that whenever the market comes back, you're going to have a killer year. My personal story. So I muscled through the 08 recession. Max did really well through it. I didn't. Like I was wakeboarding on Lake Austin all the time up to 2007, my 20s. It's a lot of fun. And 2008 hit me like a ton of bricks. And, you know, we had leads coming in. They were all going to me because we didn't have any agents. And then all of a sudden that stopped. We only had these crappy registration leads. And so I had to spend a couple hours a day at the kitchen table, making 100 dials to get 1 or 2 people on the phone that were maybe interested in seeing properties. So I did that for a few years and I hated it. And I tried to go to law school and I couldn't because I owed the IRS money. So it's like all this stuff that at the time seemed dismal. It was the happiest accident ever because whenever the market came back in 2012 and I'd just been head down working the whole time, I had my best year ever in 2012. I did like 10 million. That was a lot. And 2013, I won the ABJ and kept doing it until we stopped submitting. So that was accidental. I realized what happened probably in hindsight and said, great, I need to do more of that. But everybody here, you have an opportunity. If you figure out what works for you, double, triple, quadruple down on it and keep doing it. And then whenever the market comes back, you're going to realize like, oh my gosh, I just outworked all of my competitors, many of whom are lazy. Now I get to take all that business. And that's really awesome.
Absolutely true. And I think there's a lot of time right now to strategize, right? When you have free time, you have time to what? Think about what your next move is going to be. And that's where I was going, Max, with the, you know, I agree, you shouldn't get diluted with trying to solve all the things or be the leading expert on all the things. But if you're able to digest and understand something that you didn't understand previously, and now you can have a conversation at a higher level than you were before, you have now shown what? You've shown that I'm a leading source of information, that I I'm having conversations that maybe my competitor isn't having because they're afraid to have it. They don't understand it. So if you have time on your hands, it's a great time to educate yourself. And that's why for me, having those conversations and going, wait, what does that mean? Break that down for me. Take the time now to dive into those things, because then when it does pick back up, you're not only going to take more ground, but you're going to have more knowledge than you had before. And I can guarantee you that the people that didn't do that, you're going to blow their minds.
Yeah.
So it'll be kind of fun to see. What was your guesstimation? The beginning starting next June that we'll start to see things improve? No pressure.
I'm
no
always
pressure,
wrong.
No pressure. I mean, listen, they have to meet to find out.
If you
right?
if you assume they start lowering in June.
Rates, I do believe rates will be better next year. You know, we're at whatever today, right? Are we in the mid sixes? Are we in the low sixes next year? I think it's a possibility. You know, is that middle of the year, end of the year? I've learned to stop putting timelines on this stuff. I think that rates will be significantly better in 2025. I think that's, to Eric's point, next year will be a better year. And 2025 is really what everybody needs to be focused on.
Next year is going to be a rebuilding year. It's like,
Yeah.
you know, you sports. I don't watch sports, but like we lost our star quarterback this year, and now we just recruited somebody.
And who's going to hit the home run?
Whatever. Yeah. Who's going to throw more home runs? And yeah, but next year is going to be rebuilding. And the reason why is we have two components to our market. We have mortgage rates and we have jobs, right? So here's the good news. Like, who's heard of ChatGPT?
Love it.
Okay, of course, right?
Who hates it? Raise your hand if you hate ChatGPT.
So there is, like, legitimately, we're in the beginning of an AI boom, right? This is new technology. It's not the metaverse. It's going to be a bust. AI is already being leveraged in really amazing ways. So right now, the major employers, like the major tech employers, FANG, who all have huge presences in Austin, they are not hiring because they know that things are not yet getting better because the Fed hasn't announced when they're going to start lowering rates. As soon as they see light at the end of the tunnel that they can measure, there's going to be an arms race for talent to try to gobble up as much market share of the AI boom as they possibly can. Austin will likely be a big part of that. When we see them start hiring next year, it won't happen all at once. There won't be floodgates, but you will likely see more hiring next year, which means more relocations, which means more move-ups, which means more people selling because now they're going to the Bay Area or whatnot. You'll see that, and it's going to get better. And that's going to be a precursor to a 25 that I'm a bit of an optimist, but I quite frankly think that 25 and 26 are going to be huge, huge boom years.
Which is also a great reason why tapping into your network of who you are referring out to, if you have some strategic alignments in the areas that do have strong tech holds, they're going to start to see that, like you said, the increase. So if you have any referral opportunities there, lock that in now. Figure that out, because that's just future income in the waiting.
Absolutely.
Yeah. Yes. Oh, I love if there's questions. Let's get the mic rolling. All right, hang on. I got to play Jenga. Hang on. All right. Thank you for helping me get my steps in. I appreciate you.
There was a generation of buyers who bought when rates were 18%.
Yep.
So what was the Kool-Aid that they drank that we can get the recipe for today to give these buyers
So people don't,
that will accept a 7 and 8%?
so yeah, so people will choose not to buy houses whenever the rates are too high, but lots of people, and people, why do people buy houses? It's because of life events. It's because they got married, they had kids, they had another kid, they got a job, they're moving up, kids move out of the house. So who you're seeing buy right now are people that they have pressure because of life events, that they say, wow, I don't care that the rate's 7%. This house is 1,000 square feet. I just had my second kid. I've got to get into another home. You don't have to find somebody in that extreme of a position, but whenever you talk to somebody who's interested, the question shouldn't be, do you want to buy this year? The question should be, do you think you're probably going to buy in the next 6 to 18 months? You're going to find that if you have enough of those conversations, a percentage of them will buy this year because they will realize, like, you can tell them the benefits. What's the win to buy right now? What is it? Why would you, if you're a buyer? Exactly. Yeah. You know, Max says, date the rate, marry the house, right? So if you buy this year versus buy next year, so let's look at the two situations. If you buy this year, you're buying at a lower price and a higher rate. We don't have a crystal ball, but likely the prices will be more next year and there will be more competition. So if it makes sense for them to buy right now, it's probably a good idea. If you need a house, that's when you should probably buy it. If you're too nervous to do so because of your job security, because of the market, because of whatever, wait and see makes a whole lot of sense also. Everyone has different risk tolerance. Talk to 100 people. Talk to 10 people, get them in your pipeline. 3 or 4 of them are going to go ahead and buy this year. 5 or 6 of them are going to wait. But over an 18-month horizon, you're going to sell 10 houses. I don't think it's our job to convince them. I think it's our job to weigh the pros and cons with them, gain trust, and then they'll make an intelligent decision.
But I also think there's no data is key. And I ran this scenario. We've been talking about this a lot, right? Everyone says when rates come down, prices are going to go back up. And that's true. May of 2022, rates were about 5.25. And if you were going to buy a $600,000 house, you were probably going to pay $700,000 for it, right? Now that $600,000 house is probably around $575,000. So if you look at 10% down, the difference in the payment at $525,000 or a $575,000 price at a 7% rate versus a $700,000 price at a 5.25% rate, the payment at the higher rate is about $60 cheaper when you compare it to 7% and 5.25%. So there's customers out there right now that don't want to buy a house today because of the rate, but they were willing to go $100,000 or $150,000 over last year, but the rate's too high. The rate's too high.
Well, and the difference is that you can refi this.
Well, that's exactly right. But back to what I was saying earlier, no one cared about the payment. It's just the rate's too high. But now all of a sudden I can buy a house for $125,000 discount and have a slightly lower payment. And by the way, I'm going to bring less cash to close because 10% of 575 is less than 10% of 700. And that's assuming the house appraised for 700.
I think those are really, really, really meaningful points. And I think that after this event that we break that down into writing, those are selling points for every one of you to have in your pocket, having those conversations with the buyers, because I was the irrational buyer and you have to be talked down off the ledge because you're right. You will go up and bid up, not recognizing that, wait a minute, this is actually better for me right now.
When buyers were beat up in 2021, fair, right? You go out there, offer your firstborn son and whatever else to get a house, right? And we had to come up with what's the win? Why do you buy in 2021? And what we came up with this, well, Austin is in the long term, Austin goes up, right? We didn't tell anybody it's definitely going to be more expensive in 2022. We said it probably will be, but 5 years from now, it certainly will be. How long are you going to be here? You're going to be here for 5 years? Great. The win is that you just planted your flag and you know that you're not going to get priced out of this neighborhood that you like. That was the win then, right? You always have to find out what's the win now and not present it like a salesperson. Present it as the win now is that you're probably going to pay less for the house and you can refinance in the future. If you decide not to, it's probably going to be a little bit more expensive next year. So if you're worried about your job or whatnot, it probably makes sense to wait. Pro and con. You're helping them understand their options. They're intelligent. They know their own risk tolerance. They will make the strong decision. And you just got a client.
Yep. And reframing the conversation. Okay. We're going to walk around. So thank you for waiting. We have another question here.
Comment quickly. I feel like the clients who are not affected by this market, and 90% of my clients this year are first-time home buyers, and my grandma. And guess who needs handholding like a motherfucker is first-time home buyers and grandma. And so it's like, it's a lot of work.
Yeah.
Everybody like me, we did what you did, and we all bought last few years. Yeah. We moved. We're done. We're handcuffed to these houses. But my question was more about the economy. Have y'all thought much about how the presidential election is going to play into any of this?
Yeah. So it's going to be, I mean, everybody always says, oh, it's an election, so it's going to be a down year. It always feels really awful. And the more you pay attention to the news, the more you pay attention to social, the worse it feels, right? Statistically, I don't know that it really adds up a whole lot. I mean, 2008 was obviously a terrible year. What does happen is consumer confidence generally declines because both sides are trying to say how awful the other one's going to be. one side who's trying to oust the incumbent is trying to say how awful it is. So you have all that in the air and consumer confidence goes down. I don't think it's going to tank any sort of, like, if you have, if I'm right and like FANG starts hiring next year, that will overpower, poorer consumer confidence. Sorry, I can't talk. But yeah, it's going to be a bit of a headwind. I wouldn't say it's going to be the biggest headwind that we face. I'm not looking forward to it. I mean, like, literally, I wish I could just hibernate for a year until it's over.
Well, it's a good chance for all of us to come in and be the normalizing voices, because we already know there's going to be a lot of chaos, right? We know that. And it doesn't matter what election year it is. It doesn't matter what side you're on. It doesn't matter. Historically, it's noisy. It's just a little noisier right now. So all of us get the chance to be that normalizing, calm, logical communication that the clients are desperately going to need. All right, we had questions over here.
Well, and the good news is too, typically during an election year, rates go down.
Yeah, no, he's totally right, because the incumbent puts pressure on, the Fed in order to get rates to go down. So that's the silver lining.
I was just going to mention that also as a source of marketing, and when you're talking to your SOIs and during this downtime, most of my clients have been cash buyers, and their interest rate sensitivity is very, very low because they're not going to be borrowing. So Max, sorry about that, but not everyone's borrowing money, but these people who are staying in their homes at 2 and 3% are continuing to pay down mortgages if they have mortgages. A lot of them don't. So I think it's important to keep in mind that we're also focused on rates and rate sensitivity and what's going to happen and what's not going to happen. Keep in mind, a lot of people have a lot of cash, and a lot of people coming here have cash. And that's been probably 35% of my business. And it will continue to be in the next year or so. And I'm grateful for it. But just know that, in talking with them, some people won't be getting a loan, especially our downsizers. They'll be selling, they'll have a lot of equity, and just keep that in mind, that sometimes it's not an interest rate discussion. It's what's on your balance sheet and how many assets do you have? So
yeah, I mean, my takeaway from that is talk to anybody, right? I mean, anytime you meet anybody, anytime you have any kind of inquiry, talk to them and, have a 5-minute conversation to figure out what their situation is and if you can help them in any way.
That was a great reminder, though, because sometimes, especially if you're a little newer into the business, you might not even recognize that. So thank you for that important reminder. Thank you for. What are they saying? Oh, really? What happened? Zoom in. Okay. Did we have some fun online just a second ago? What did they say? All right, what's your question?
So my question is the opposite.
No, no.
What did they say?
Seriously?
He's naked.
I thought I had iMessages on again or something.
That's hilarious.
Yeah.
I had
Okay, I have a question about not the stalker on the computer.
Okay. All right. We're good. All right. Time out, everybody. We're good.
I mean, can I just say that's hilarious?
It's awesome.
Yeah, it's Zoom life. I mean, we've already gone through COVID. We've seen them all. I've seen more D pics than I can even begin to tell you. All right. Yeah, that's just Zoom life. Yeah. Okay. All right. Can we get back to normal? Here we go. All right. Are we ready? All right. Good question coming.
I have a question for you that does not involve any kind of pictures. So sellers right now are looking at what happened 18 months ago, and they can't, whether or not they downsize, upsize, sell, move, they're still thinking that they're held on to a price in their head. And the other thing is that some of the sellers today were overextended in the market 18 months ago and are now like, can we beat capital gains? How are we going to make a profit? And they're not. How do you realistically bring those sellers back in line with today's prices?
Well, I mean, I think that you have to have really, really honest discussions, right? And you can't entertain, like, what was the case in May of 2022 was just the statistical peak, right? So next year will be easier because now these folks have had a year and a half basically to come to reality. So it won't be as bad as this year. You'll have a lot of sellers that didn't succeed this year that are back in the market next year. It'll be a lot more realistic. But you have to ask them, the situation, the worst situation, right? They bought in May of 2022 and they have a job transfer. They lost their job. Now they need to sell. Yeah, that's a really bad situation. There's nothing you can do to sugarcoat that. You're not doing them a service by listing high. And if they do list with somebody else and they list too high, let them. I mean, that's something that your job is to give them real information and hopefully they believe you, right? But whenever you take another job or whenever something happens in life, you have to work through it. One of those issues might be that I paid too much for a house compared to today. Now I have to get rid of that house in order to make this move. What's the option? You can also rent it. That's not a great option. Here's all the reasons, 1 through 5, why that's going to be more difficult than, oh, I'm just going to throw it on the market and lease it, right? But you have the discussion, you approach it consultatively, and hopefully it works out. And if it doesn't, that's not the listing for you.
Great questions, by the way. Okay, we got another question back here, and then I'm going to come to you next.
This question is for both of you. So what are you or your teams doing specifically that your competitors are not doing that you think will carry you through this down market?
Yeah, that's a great question. I think we're not just spitting out headlines. We're actually taking time, all the things that I mentioned earlier, where we're actually sitting down, going through multiple options, even options that we know aren't the best for the consumer. We want to show them that, right? Here's everything. Here's what I think you should do. Here's why I think you should do it, and really break it down. But part of that is really listening to their story. Like if we look at it, doing a 2-1 buy down sounds awesome, but it's not for everybody. So we can show that, we can show permanent. There's different things that we can do, but it's really committing to taking the time with a customer, a buyer, to show them everything and explain everything. At the same time, it's doing things like this, right? Helping educate realtors. I know y'all get blown up by loan officers every day. Let's go to lunch. Let's go to coffee. I have no business. Come on. But it's, but it's really, it's educating is the big takeaway. And the more you can get out there and the more you can educate everybody, the better off we'll be. And so we really focus on that. There's a lot of stuff too that LoanPeople does with finance sheets and co-branding marketing and stuff like that we've made it really easy to do. But I think a lot of people do that. I think it's just setting yourself apart by educating.
At a high level, we do what works, right? So you look at it and you say, here are the things that are working for you, continue doing that. But I think you probably want more specifics than that. So we're a big Ninja shop. So we recommend that everyone read Ninja, go through one of the courses or whatnot. Feel like the book is about 90% accurate. I'm not a fan of how they approach tech. That's the only thing that I recommend you sort of ignore if you read it.
Wait,
so
what book was that?
it's Ninja Selling.
Ninja Selling.
Yeah.
Oh, and what are we ignoring?
Well, tech, you'll appreciate this, Stacey. They tell you to use a spreadsheet instead of CRM. So that's something that
I happen to know a really good
I've told
one.
Dan he needs to reach out to them really badly.
We had, I know we had another question right over here. Who was, okay. All right. I want to make sure I don't forget you.
Hi, Eric. Thanks you for putting this on. My question is, what do you think in the short term? I mean, what we're faced with is a lot of sellers that don't want to reduce their price, and they're thinking that in January or February, the interest rate's going to go down and voila, they're going to get the price.
I don't know that they're going to get their price, but I know that the market will be better in the spring than it is now. I mean, seasonally, the market always improves in the spring over the fall, winter. So, you have to look at where they're priced now. If they're way overpriced, then that's probably not going to work in the spring. But if their price now would have sold 2 months ago, they will probably sell it in the spring. That's what's usually happened in the past. And I think it'll happen again.
I think you actually were before. So hang on. All right, hang on. I'm such a fair Libra. I walked over here. You win.
Before I felt that scams and fraud were preying on consumers. Now with these desperate times for us, the realtors, I feel a victim myself. So what are your thoughts about it?
Let me reframe that just so for those that are up here on Zoom. I think you were saying that how do you protect yourself from being scammed or to be subjected to any sort of fraud as the real estate professional? Is that correct? Okay, good.
So obviously because of the data that we house, we have to be extremely secure. And sometimes it irritates some of the loan officers that work for me, but you know, protection and data is extremely, extremely important. Number one, like password integrity is really key. A lot of what I've seen with the wire scams that go out, you know, there was one example. A friend of mine was buying a house and she got an email from the escrow agent to go get her wire check, to go send her wire. She got to the bank and the teller noticed that they spelled Austin title with 2 I's. But it was the escrow agent's information on there. And I've seen it time again. These hackers will get in, you know, they'll send you some sort of phishing email. You click on it, they have your password, they're in your email, they get your contacts. So password security is super key. Number 2, always call and verify, right? Call the title company, call the lender, call whoever's saying you owe money to them, call them and verify, I owe this, I'm sending this, so on and so forth. Don't click on any links you don't know where they came from. If you get an email that has some link from your credit card company, a message from your credit card company, don't even click on it. Go to your credit card company's website, log into your account and see if there's any messages in the inbox.
Most fraud is phishing fraud. It's not sophisticated. They're not, it's not some, cyber hacker that's, hacking in. It's just phishing fraud. So we had, unfortunately, is a client that was victimized, and they bought the domain bramlettresidential.com, but they made the L an I and then capitalized it. And then they phished her, and she did not do very safe practices, and she lost a bunch of money, and it was really, really sad. So just be aware of phishing. I mean, I would say if you're specifically worried about it, read up about phishing and just be vigilant, sorry, better word. Oh, the leads, like bad lead providers. Just be skeptical. I mean, it's something, if it sounds too good, it probably is. It sounds too good to be true, it probably is. And yeah, I get hit with all those, every day. If they want you to pay money up front, you've never heard from them, you've never heard of them. There was a guy that I won't go into the details, but if they're asking for money up front, or, it seems too good to be true, just be skeptical and tell them no.
So sometimes sellers are saying, well, I'll drop my price to where you're telling me to, but why don't you drop your commission?
Oh.
You're not the one overpriced.
I mean, I would just say, listen, if you think that our relationships come to an end, I'm very sad. I want you to work with
But what
me.
about the agents that need listings and that want listings and that don't want to just say no?
I mean, I would argue that you should say no, that you want good business. Like, if you have, in my experience, somebody who's going to ask that is going to be somebody who's not a great client. They're going to, take too much of your time. They're going to take way too much of your mental energy. You're going to be mad every time you get an email from them because they worked you over on commission. And so you are much better off to be in a good headspace and to use that time that you might save by telling this guy no and he cancels on doing something productive.
Yes, 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 and yes. And that taps back into what you were saying about the fear. When times are tough, that's when adversaries will go after you because they know you're insecure. They know that you're going through challenge, and that's when you're most likely to make mistakes. So I would argue to say that now more than ever, be more diligent than you've ever been. Like you were saying, side channel everything. In other words, anytime you get a link, even if it's a familiar link, before you click on it, whether you go into chat and say, hey, or text, hey, did you just send me that link? Don't trust anything that way.
Yeah.
Be diligent because it is on the rise.
People at my company get emails from Max Leaman asking to do me a favor or call me back. And if you look at the email, it's not from me. And they text too. I'll get, hey, it's Max. Don't call me. Just text me. I need you to go get me some gift certificates. It happens all the time.
Boy, you like gift certificates. But my point there is, just like your question about, should you accept less, standing your ground, having boundaries, and that integrity portion is so critical to you being secure, right?
Yeah. And what I'll say to that is that it's, there's all these, and I believe in abundance and scarcity mentalities, by the way, but it's a very scarce mentality to say, I'm going to keep this, crappy seller because I have to, because there's nothing else out there. You can only have a mentality of abundance, a mindset of abundance, if you truly have productive activities that you can go lean into. So it's critical that you figure out what are your productive activities. What can you do? It's not going to be the same results that you had in 2021 or early 2022. But if open houses are your thing, like, can you pick up one client for every 4 open houses you do? Fire that seller and go do 4 open houses. You just got a better client. But you have to have that productive thing that you can then swap it out with.
But it needs to be real productive, right? Like, I think sometimes people can trick themselves into, I'm being productive, instead of thinking about, I would challenge you to think about, what are my money making activities?
That's what I mean when I say productive.
Versus, yeah,
not in what I talked about earlier, not an experimental activity that you hope is going to turn into something that is proven that you've done in the past, it's going to work, that you can go lean into. And yeah, fire all your bad clients. If you have a book of business right now and 20% of it is bad, it's not going to sell, they're jerks, get rid of them and go take that time and energy and do something productive with it. You will be much happier a month from now.
I'm going to ask a really hard question. Ready? For those that are responsible for others in the room who have the newer agents that are not seeing business, that are really struggling, they're not going to be able to pay their bills. What can you do as a leader during this time where you're seeing a loss in your business, your overhead? What can you do do you let them go? Do you help them out? Like what would you do? I'm just curious. That's a hard question, but it's a real question for a lot of people. Who wants to take that hard one?
I mean, you've got.
That was really, can I rephrase that question?
I mean, the headline is it's not working for them, right?
Right. And it's not easy to have tough conversations with people, but sometimes a tough conversation with someone is exactly what they need to move on to something else. It's
a kindness to say, this isn't working here. It's not working for you. You need to find something that you can do, somewhere you can be where you will be productive. If you're a leader and you have a hard time with tough conversations, read the book Radical Candor. It's very short. It's really amazing. It certainly changed my approach to having hard conversations, and it's a great read.
I love that you brought that book up. How many of you listen to or read 1000 Watts, any of their email publications that come through? So Mark Davidson was literally, just when I saw him, he's like, you need to read the book Radical Candor.
It's an awesome book.
Yeah. So another Radical Candor, and then 1000 Watt.
Radical Candor is the book, and I think it's an email list or a podcast is 1000 Watt Mark. He's an industry leader, thinker out of San Francisco.
Sorry, Max, go.
I was just going to say along those same lines too, performance improvement plans. Also, they're not fun, but they go a long way. And that's one way to really get somebody either to see, hey, I'm not doing a good job and I need to change what I'm doing. And if I don't, then you can hold them accountable and they can move on out. But at least people think, you call them pips, right? People think, oh, I'm going to pip someone, they're going to leave. Well, if they do, that's fine. But you're also doing them a real service by saying, look, these are my expectations. This is what you need to be doing, and you're not doing it. Let's turn it around. You've got 90 days or whatever. Let's put a plan in place, and they'll follow it and move up, or they'll have to move out. But
so I'll say this, because probably 10% of the people in the room manage people. So to make it relevant to everybody, difficult conversations early are very, very good. Difficult conversations whenever you're at the end of your rope are really, really bad. The only way to avoid that is to have them early. So if you have something you can tell is not working with a seller, with a buyer, with an agent, with an employee, with anyone, you're doing a really good thing to have that hard talk early, as soon as you know for sure that it's a problem. It's not just maybe it's a problem. I'd highly encourage everybody to do that. It's transparent, it's honest, it's a great way to live.
And I appreciate that you gave that statistic. So if you're in the 90% that are not in leadership, here's a great way for you to reframe and reach out to the leader that you do answer to and ask them for what you need. Say, hey, I need a guidance plan. I need you to help me figure out how I'm going to navigate this. I want you have done this before. I need an action plan. Give me a roadmap. So being a proactive team player and letting your leadership know what you need to be successful to set up for success, it kind of makes you stand out from the crowd as well.
Thank you.
Yeah. We have another question. Oh, good. I love this. You get to go next.
All right, so I have a quick tip for wire fraud. Don't send all the money at once. Send a $5 wire. Make sure the numbers work. I'm dyslexic, so this is what I do for myself. I send you $5.15, make sure it gets there, right? And then we send the money. So the question for Max is, I've done some deals in the past where instead of paying points, I agreed to basically prepayment penalty of 5 years. Are you seeing that in traditional mortgages right now at all?
Not on primary residences, not in Texas. There are investment property options. Yeah, for sure. A lot more on DSCR, which is debt service coverage ratio, where the payment, if the potential rent equals the payment or is a little bit higher, they'll qualify. Those rates really you do see quite a bit, and they can range 1 year to 5 years.
I have a question regarding interest rate buy downs. Which ones do the sellers have to pay for, and which ones can be paid for by combination of seller, buyer?
It's really any of the temporary buy downs. So the 2-1 buy down, the 3-2-1 buy down, that kind of thing. Permanent buy downs can be paid for by anybody. So it's really just the temporary buy downs that the seller has to pay for. Yeah.
Okay, thank you.
Okay, we're moving on. I love that you're all being interactive. Thank you. Okay.
For the majority of agents who are probably going to make less money this year, whether it's yourself or your team or individual agents, what would you consider a successful year that's not income based?
That you're still here.
That's 100%. So there's a concept in the tech industry that when things get hard, you survive and then you thrive. And so this is not a year that anybody should say, I'm going to increase. If you're increasing, great. But this is the year that you make sure and get by. Max and I, our goals, don't go out of business, literally. And we're in a position, well, I mean, I don't think we're going to be gone next year, but you stick around so that you can be here whenever the market comes back and you've worked your butt off the entire time. And then you have the best year of your career in 2025, probably.
So when I first got in the business, I was 20 years old. I actually had I was selling phones before this, and I had a database of everyone I sold a phone to. I don't know why I did that, but I did. But I came into this business that's 100% commission. I was 20 years old. It took me like 2 days, 3 days to figure out what a mortgage actually was. But I was told I could make a lot of money, and that seemed pretty awesome. So I went and got a night job. And like, even now, if you're not making any money and you can get a second job, get a night job, drive Uber, do whatever it is, whatever you can do to stay in the business, staying is the success.
I would say, yeah. So second jobs, I think that's kind of a last resort. If you've identified that productive thing you can do, pound it and make sure that that's keeping you afloat, right? If you have to cut expenses, I mean, if maybe you overextended whenever times were good, solve it, right? Stick around. 08, there were a lot of, I think half the agents literally let their licenses go between 08 and 2012. By the way, 2013 was awesome because the market was back and everybody who stuck around was really incredible. We knew everybody. It was a couple of years that were super duper fun, right? So stick it out. And if you find that one thing that works for you, find it and then just pound it and make sure that you can stay afloat.
Are you doing anything to prepare for the commission lawsuits?
Yeah, I've got a whole write-up on this.
We were waiting for that segue. Thank you.
And Stacey has a good, because I wanted to talk about this.
Before we jump into that, someone else had a question. Was it you? You're good. Okay. We were waiting for that segue. And we will make sure that.
Send me the 20 later. So.
This email actually went out earlier this morning, right?
I sent it to you guys this morning. Yeah.
Right. So you can reference these facts.
So lots of scary stuff in the news, right? About we're gonna go out of business. Our way we're gonna get paid is gonna change. Everybody's read that. Or are you familiar with the lawsuits? Okay. So super quick primer on it is that there are 3 lawsuits. One of them's been settled. I don't know if that's been approved by the judge yet or not, but it's been settled. So there's 2 active lawsuits. What they're claiming is that our commission structure is anti-competitive. And it effectively fixes the 3% commission to buyers. The merits of that is a discussion for another time, but you want to look at what can these lawsuits potentially do. and sorry, what's a likely case scenario and what is a worst case scenario. So the 3 lawsuits, you have MLS PIN, that's what was just settled. You have Burnett versus NAR, you have Moral versus NAR, right? So MLS PIN that was settled affected the New England area. There's a $3 million settlement, and they had to change their rules so that every seller has to confirm that they know that they don't have to really pay a buyer's agent. Okay, great. So there's a form or there's some new verbiage in their forms, whatnot. That's the net result of that one. $3 million settlement. Then we have Burnett versus NAR, that's limited to Missouri. So whatever happens there could certainly, reverberate, but that's not something we need to be super duper concerned about. And then Emily, do you probably know how to pronounce it? Is it Moral versus NAR? Merle versus NAR. So this is a big one. Okay. $13 billion in damages is what they're claiming. They're suing NAR. Now here is something that I saw is because of the size of the case and the likelihood of appeals, it may take years before a final outcome is reached. So when I look at this, I say, okay, what's a likely scenario? Like, what's the likely outcome? Who is spearheading this? Is it some consumer watchdog group? It's attorneys, right? What do they want? What is their goal? Right. Okay, who here really, really hates paying all the money into NAR and ABOR and all that? Don't raise your hand, because this is why we pay them, guys. We have, with the exception of the trial attorneys organization, I don't know the name of it, we probably have the strongest, lobbying organization in the United States. And that's good. That's good for everybody in this room. So a likely case scenario is that they will settle for some money, who knows how much, and there will be something on paper that NAR gives up and says, now we have to have this additional form signed by the sellers. Potentially we have another disclosure that buyers have to sign. But the scenario that everybody's scared of, that now the buyers have to pay the buyer's agent commission, that is not likely. If Emily's heard differently, I'd love to hear it, but it's scary, but I don't think personally it's likely. Now, one more thing with this. There is zero value in spending any time or mind space on this until it's settled. Really good friend of mine is a builder. And whenever they were doing the Code Next, right? And you saw the blow by blow in the papers. And I called Matt and was like, what do you think, man? What's going to happen? He said, oh, that Code Next. He said, I don't care. He said, I'm not paying attention to any of it. I will pay attention very, very quickly if it passes. What happened to it? Nothing burger, right? I'm not saying this is a nothing burger. I'm saying that it could be. It also could be a worst case scenario. So I think you wanted to talk about what's a worst case scenario look like. And I would love to hear, Emily, what your opinion is on a worst case scenario. So.
Well, let's bring Emily up, by the way. And before Emily comes up, I want to say that, and nobody paid me to say this. In fact, nobody paid me anything to do anything, to be very honest. but my point, I have filtering issues sometimes. What I was going to say is, when you think about these things that are very scary, this more than anything tells you, if you feel you have a very strong opinion about something and you're not involved at a national level, then get involved. If you have a strong opinion and you're not involved, guess what? You may have people that are involved that don't have strong opinions, that maybe don't have as much insight that you have. So if you're super smart and have strong thoughts and you can advocate, you should be getting involved. And you didn't pay me to say that, but it's true.
Hi, I'm Emily. I'm the CEO here at the Austin Board of Realtors and Unlock MLS. It's really nice to meet you guys. Thank you for letting me pop into your meeting. I'm going to disagree with you though, and I'm sorry about that. We clearly did not go to dinner and have the pre-talk, but I really disagree that you should not be taking some action now, because I think it's reasonable to understand that we lack a little hygiene when it comes to the relationship between buyers and buyers representation. Not everybody is getting a buyer's rep to begin with is a problem. All of you should do that. And you should not slip it in at the time that you submit a purchase offer or a purchase agreement. Yeah. You should actually get it when you retain an agency relationship with the client, which does not happen regularly. And the reason I say that is the case centers on, are you transparently conveying what you do, what the value for what you do is, and how you get paid? And without a doubt, in my mind, the tea leaves read that that suit will find that that is not happening often, that people are not being transparent with their buyers about their services and how they get paid and how much they're getting paid and what they should expect in the agency relationship that they hold. So our strong recommendation to brokers and to the agents that they serve is that you should be getting buyers reps up front. You should be really comfortable talking about what your value is as a buyer's rep. You are doing things. You are not Mary Poppins who pulled a house out of a bag and made this transaction happen without a problem. Own your value in that process and own the fact that you're getting paid for it, and be okay talking about how much you're making and where it came from, because undoubtedly the outcome of the suit will be something related to who's paying you, who's directing that payment, and were you transparent with the person whose interests you represent in what you're getting paid and how you got paid that money. Those are things you can do now.
Yeah,
People don't
I
do.
agree. I mean, I think transparency is it's utmost importance, right? And when I used to tell buyers all the time, okay, well, who pays the commission? How's it paid? And I would say, well, the sellers technically pay it. You know, obviously that's going to be a function of the sales price. Here's what I do for you, right? And there's no reason. I always hated the script of, oh, it's free to you, you don't have to pay anything. You know, and say, no, we get paid by the sellers, but obviously that's going to affect the sales price. You know, that's just what it is. Well, I want you to give me a rebate. Great. If that's part of your business model, yours, your agents, like, then offer them the rebate. If it's not part of your business model, it's not part of mine, then I would say, you know what, we don't do that. There are lots of companies that do. Here's a few. I would literally refer them to companies that offer rebates. And I would say, if that's for you, I think you should use them. What I found is that about 10% of the buyers, they wanted to save 1 or 2% to get, it's impossible to provide as good a service whenever you're paying less, right? They were more focused on that than they were about service. And 80% of them, I don't know where the other 10% is, but the 80% of them, they wanted great service. I use this as an example for sellers all the time. But anyways, you're going to find that the vast majority of the market cares a lot more about service than they do about price. So if that's your model, that you're full service, you're going to have more of a target. If your model is discount, you're going to have a strong niche that you're going to be able to attack, because most agents don't do that. But yeah, don't hide what you're earning.
And then Eric, just a quick note on timing, because I think this will be pertinent to you guys. The settlement that occurred with MLS Penn, much smaller case in terms of the scope of it. And the only person or the only entity that has settled thus far is the MLS. The brokerages who were named in that suit still haven't settled out. So there's potential for more money, more impact there. But the rules changes are things that we're looking at, that others have looked at. You'll note that we just announced a rule change, or a shift in a rule that has existed for a long time, where we'll now accept $0 as a commission offered in the MLS for the purposes of creating flexibility in those compensation discussions.
Well, and I can speak, I mean, so whenever I saw there was a massive, kerfluffle on Facebook, which is daily, right?
Oh,
and,
was there? Send that my way.
I mean, to be honest, I probably just unfollowed it when I saw it, because it's not worth your time or energy to engage in that stuff. And when I saw it, the first thing I saw, somebody was really mad about this ABOR change. They changed from, you used to be able to write in $1, right?
Right.
Yeah. And now you can write 0 in. And what it is, it's optics. It shows them that, hey, no, we do allow for sellers to list and say, no, the buyer has to pay the commission, which free market, they should be able to do that. It's a technicality. I guess this person was really mad about his potential $1 that he was going to lose. So, and I looked at it and was like, oh, it's whatever, it's nothing.
Yeah,
But
please keep saying that. And then 2 more quick notes and I'll leave you be. I don't want to interrupt you guys. Stitzer or Burnett is the case in Kansas City that will go to trial in October. So the next round of conversation around what happens with these suits and their impact and the potential for there being precedent in the settlements occurs this fall, likely to be fast because that judge has been swift. 90 days. By the top of the year, we know what comes out of Sitzer. That sets a stage for the case that actually matters, which is the Merle suit.
Yeah, so there's gonna be some precedent that they'll look at.
And that's a good thing in the sense that at least we start to get an idea of what the shape is of the potential outcomes. That allows MLSs and brokerages and agents alike to all be proactive to some degree.
We have a really unique system in the United States. It's interesting if we grab lunch with Dan, he'll explain to you what happens in Australia. Totally different. Yeah. And so you have to understand that our system is kind of weird, and things might change because of that. But I can tell you this: we're not going to get replaced by AI because the insurance guys will be first, and that hasn't happened yet. And people like being guided through this process, and you guys will have jobs. You might have to pivot. Oh, another book, Who Moved the Cheese? Take you 10 minutes to read or watch on YouTube. It's another really good one. Make you feel who moved my cheese, or who moved the cheese. But if this happens, then the cheese moved and you have to pivot and figure out what you're going to do. Opportunity, take more market share, get really good really early so that you get more business.
And just pay attention. When Merle goes to suit, there will be a more national conversation about the structure of how houses are bought here and how people get paid to do that. That's an okay thing. That's a good thing, actually, if you're really good at conveying your value and conveying why you get paid what you get paid and whatever commission you require as part of your deals. That is a thing that you could use to your advantage, or could be really scared of and say is going to harm your ability to do business here. I encourage you to think about the first part of that. But Merle is a suit that covers the entire country. There are 20 markets named as co-conspirators in this monopoly that they call real estate. Austin is one of those co-conspirators. So we've had the privilege of being subpoenaed to the ends of the earth on this case already, and are working hard to tell a story about why our market works, why real estate is transacted at a higher volume in America than any other country in the world, and why people can make a living doing that in a way that represents the interests of consumers and is pro-consumer. So do pay attention to it coming. I'm actually so encouraged that somebody even asked the question.
And when I say don't pay attention to it, I don't mean like don't stay abreast of what's going on. What I mean is don't read about it every day. That's something that I'll probably, read about once a month and say, okay, great. I caught up for the month. That's the environment that I'm now working on. Time to go to work.
I'm good with that. And thank you for letting me pop in.
Shoot me an email if it changes a bit.
I got you, Eric. You're my only one-on-one in the whole 4,000 brokers. And thank you guys for being here and learning from such great experts. Appreciate y'all.
I love that. Thank you. We're very fortunate that we got that top of the chain. Thank you.
If I can actually promote Emily for a second. So I've been here for 20 years, and she is the first CEO that I think actually cares. Like, we've had past CEOs and beyond. By the way, that's a pretty low bar. Cares a lot and is incredibly competent. So we're really, really lucky here.
Yeah. And just to kind of to speak to Emily's, she's focused on all of the facts, and she's focused on urgency because she's in it every single day advocating for us, for all of you in the room. And you are advocating for our mindset so that we can stay focused. So I think between both answers, there's an actual truth, whereas
neither one of us are wrong. Yeah.
Neither one were wrong and both were right. So yeah, just wanted to make sure you knew that.
Well, it's 11:45 right now, and I know we said that we'd be here until 12, and we absolutely will. It doesn't seem like anybody's been shy about leaving, but if you guys have to leave, please go for it.
Is it really almost 12? Time flies when you have really good people in the room. Do we have any final questions, final thoughts? Okay. Oh, by the way, hi, all of you up there. We're going to go to your screen and look at all your questions before we go. While we do that, who raised their hand over here? Okay. We're going to go to this question, and then we're going to go to the chat.
I saw an article yesterday by Grant Cardone saying that Austin and Seattle are two markets that he wouldn't touch with a 10-foot pole because they're overbuilt. And so everything we've heard from the economists coming in saying there's shortages of inventory. So I just wanted to hear you respond to that.
By the number, I saw the article and I didn't read it because I was like, this isn't even worth looking into. I know a lot of people who highly respect Grant Cardone, and I respect them. That was my first pass at this guy. That was clickbait. I mean, you'll see these sort of, opposite takes people have, or these really extreme takes that they have, and they do it because they want to get more visitors to the site. There are no numbers that back that up. Mark Sprague, incredibly unbiased, right? That's all I mean, one of the things he always says is just how tight inventory is. By the numbers, we're at 3.4 months of inventory here. That's a balanced market leaning towards sellers. He's just wrong. I wouldn't worry about it. Yeah. So maybe if he's looking at multifamily, sure. But that is a parallel market to Austin. I'm sorry, to residential real estate. It affects us to a small degree, but not to a large degree.
Okay, I'm going to tap into the chat just so we make sure. All of you that are in chat, I want to say thank you, first of all, for tuning in. Appreciate that. And I apologize that your questions are getting too last. I was just running around the room. Okay, so as far as Michael Jerkash asks, as for lead sources, what are your best specific actions you are doing with your SOI and your other marketing efforts, both paid and unpaid? So basically, what's working for you when it comes to your sphere? What's working for you when it comes to the leads that you purchase?
So we're super duper transparent. The one thing that I consider, intellectual property is our advertising campaign, and I don't share what we're doing. I mean, it's taken me, 15 years and a lot of money to get there. SOI, sure, absolutely. Cake balls on the birthday, Tiff's treats on the home purchase anniversary. Getting a weekly market update of sold listings in their neighborhood, getting 1.5 newsletters per month. And what we can't automate is calling, texting, emailing with a personal message to see how they're doing every 90 days. The agents who just tap into our automation, they see increases. The agents who actually work their sphere, make phone calls, go on 3 lunches a week, they see massive, massive improvements. So that's the secret sauce, is the human touch.
Okay,
Yeah,
so let's see
insane.
what else we have.
You stole the cake balls from us.
Let's see, in the chat here, someone else, back when we were having the conversations about, should you accept working with a client who wants to negotiate your lower commission rate, Jonathan Andrew Ratcliffe shared with us, the amount of work that you do doesn't change. So the commission shouldn't change either. Stay firm on your commission and never falter on that. Keep the integrity amongst yourself. Also add a fee to the listing that if they terminate the listing for any reason during or after the listing agreement term, the seller is to pay you for the work that you put into the listing. So that's an interesting strategy that, someone's working with over here. Let's see what else we have in here. Cale Anderson shared that the 50-year historical average cost of a mortgage payment compared to gross income required 27% of your gross income. With today's current interest rates, a mortgage payment that requires 29% of your gross income is not outlandish. It's just normal. What do you think of that, Max?
I agree.
Yeah. I'm just seeing if there's anyone else here. If there's anything else. Hey, everybody will get access to this Zoom, right? And when we share the Zoom, do they get access to the chat as well?
I believe it saves. I'm not real good at it.
Yeah, I think it does. Go back through the chat if you can, because there's, different pieces of insight. Lots of smart people that are in the chat room as well. Thank you, all of you, for your insights. I think there might have been one more question. Oh, actually 3. Hang on. We got more people coming in. Olivia Vale wants to know, if a buyer is consulting with 3 lenders to get the best deal from a lender, then how can we help them to parse information with every rate sheet looking different?
Can I tell them the strategy I always use?
Please.
Yeah, I'd say, look, it's totally normal to shop rates. I think it's a good idea. You don't need to shop rates until you have a place under contract. Why don't you talk to a couple lenders and see who you like the most, get pre-approved, figure out roughly what your rate is. Whenever it's time to shop rates, if you really like that first lender, if there's a better rate sheet elsewhere, be open, show them those rate sheets and let that person guide them through. So I always did with Max, always worked really well.
Yeah, I mean, that's just it, right? Like, people a lot of times want to shop rate at the very beginning. We're not under contract or anything. And I always tell everybody, absolutely, you should go talk to a couple other lenders. But right now, you should be talking to and working with whomever makes you the most comfortable. So go talk to 3 lenders before you start pulling credit and all of that, right? And let's find out who you're most comfortable with to go down this journey. Then when you get under contract, if you want to get a couple of other quotes, go for it. You'll have a sense of the plan that we've put together, right? Because now we know we're not just asking about rate, but we're asking specific questions. how many points I want to pay, no points, all of these things. So, yeah. And if you think you find something better, you bring it back to the loan officer that you want to work with, and you work through those together. Not all estimates are created equal. They all come in different formats. It's all, it can be very convoluted. So
Wait, you just said something that I think not everybody knows. So let's say that somebody is shopping around for a lender and they find one that they really like, but it turns out that their rate isn't as great as maybe the candidate B. They can come back to that lender and say, hey, I'm thinking about going with candidate B. What can you do for me here?
Well, I think it's more about, I'm sure, but really it's, here's what I've got from this other lender, and then let's break it down. Rocket Mortgage is great at this. I got this super low rate from Rocket. I'm going to have to go with them. Well, hold on, send me the estimate. Oh, they're charging you 5 points for this rate. Well, I could do that and I could charge you 3 points for it, but that also doesn't make sense, right? So it comes back to, you can't just focus on rates. So you've got to look at the whole package for now and for later.
I've seen hundreds of these rate sheets and I still don't like looking at them. I mean, I can decipher them, but tactfully lazy. And when I see them, I just pass it to Max, pass it to your favorite lender, say, can you please decipher this? It's their job. They're your favorite lender. They're not going to be dishonest, and let them do the work for you. They get business out of it. And hopefully your client also trusts them. And it's just an easier way to do business.
Here's a good question for you, Max. But how would you know what amount they are approved for to shop for to get under contract? Let me read that again. Sarah Simpson. Let's see here. Let me go back. Olivia's original question was, if a buyer is consulting with 3 lenders to get the best deal from a lender, how do we help them parse that information? And then the follow-up question that Sarah had was, but how would you know what amount they are approved for to shop for to get under contract? I think yeah.
Yeah, I think there's confusion. I mean, obviously you're not going to know until they get pre-qualified with whatever lender it is they've decided to get pre-qualified with.
Right. Okay. And it looks like we have another question here. She says, I'm sorry, I got a little bit of confusion there. So basically, never mind. Okay. There is one more question here, and then we're going to wrap it up here in the room so that we honor the rules inside of the space here. Laura Staves wants to know, when it comes to all of the out-of-state buyers that are coming in, where are most of us in the room seeing those out-of-state buyers coming from?
I will do this. I will send a poll to everyone on the email list, and we will try to answer that question.
Okay, so everyone in the Zoom room and everyone in this room will do a poll, and then we'll figure out and identify. Crowdsourcing is the way to go. Get that information. So wonderful. Well, I want to thank both of you, first of all, for, it's not easy to sit up in front of your peers in a space and talk about really, really hard things and speak from a place of vulnerability and run the risk of having someone have a differing opinion. So thank you for being that type of leadership, first of all. Thank you. And I appreciate every one of you that took the time out of your days to come here and be together, to collaborate, to share, to learn. And those of you that sat on Zoom, same for you, because I don't know about you, I'm so sick of Zoom, and the fact that you stuck here all the way through, you're amazing. 2 hours on Zoom to me is like death. So those are amazing people right there. Let's continue doing more of this, and let's continue having more of those crowdsourcing panels, and let's poll. Let's keep a pulse. The more that we keep a pulse, the more that we're going to have that information that's going to keep us through the challenging times.
Thank you for coming down, Stacey. You're so amazing at this.
Thank you.
Awesome. Thank you.
If I can do a tiny plug, if I may,
Go for it.
if any of those of you that raised your hand that said you are familiar with Follow Up Boss, if you don't know already, we are having our annual event next month in Los Angeles. If you don't have a ticket yet, I have a discount code, and I'm happy to share it with you. That goes to you in the Zoom room too. I might get myself in so much trouble. There's a lot of people in that room, but I can hook you up. So if you're interested, and if any of you in the room are like, I have no idea what that is, you can certainly follow up with me, and I'm happy to give you more information. Follow Up Boss. My name is Stacey Soleil, and I'm very happy to be here. Thank you for having me. Thank you, Max. Thank you, Eric.
Thank you.
Thank you.
And follow us all on Instagram. Thanks.